Hi, this is Kirk with Forex Trading Secrets. What we want to talk about today is some ideas on making money in the Forex market. Not just playing around with it, but actually making money and making it a good investment for the time you put in. So we're going to discuss what can be possible in trading the Forex market. But most people can do it if they just follow some simple rules. So we're going to talk about a couple of different trading strategies that people we have trained, the way they're trading and what they're doing. This individual, 400, 700 pips a month. That's pretty respectable, but he trades 10 to 30 standard lots at a time, and you have to get an account built up to be able to do that. So it's between $40,000 and $70,000 a month. That's based on what he shared with us. I know there are some months he's done more than that. Very seldom does he do less than that now. Now another individual, 300 to 500 pips a week. That's quite a bit more than the other individual, but he's only trading one standard lot per trade. That's 3,000 to 5,000 a week, which is really respectable, and then that is quite a bit per month. A nice little income there. Here's an individual that makes many times between 700 and 1,000, sometimes more. This is per week, but they trade one mini lot or less. One mini lot would be the most that they trade. Sometimes they're only trading dimes because they have such big drawdowns, and then they make big pips. I don't think that's necessarily the best way to go, but that is what some people are doing. 700 to 1,000 pips a week, or that's 2,800 to 4,000 a month. Okay, now we've been talking about these individuals who make large numbers of pips per week, and over the years we've tried to talk to people and show them how to do that, and some people can do it, but we're finding that we want to change that some and show people how they can actually start making money, use smaller pips per week, and actually make quite a bit of money doing that, and we'll go through that example. Now we're going to talk about how you can be successful in a short amount of time using small numbers of pips. And we're going to be looking at small numbers of pips per week. And so this breaks down to there'll be small number of pips per day as well. So let's talk about 10 pips per day as the example for what we're going to be sharing here. That's 50 pips a week. Now let's say you had a $2,500 account and you traded 4 mini lots. Now you can go a little bit higher than that. If you have an account that you have 200 to 1 leverage or higher, yes, you can go a little higher than this. If you are in the US can only have 50 to 1, then this is about as much as you'll be able to trade. So this is based on what someone can trade in the US, and those who have margin levels higher can trade larger lot sizes. So these will be just some examples of what you can take it from here. And so if you did have the 50 pips per week, that's $200 a week or $800 a month. Well, on a $2,500 account, that's 34% return on your money. So that's a good amount of return trading. Now, let's take 10 pips a day times 50 pips a week. That's the same amount there, but now we're going to increase it one mini lot higher. And so we go 250 a week, 1,000 a month, or now we're talking about this is a 40% return per month on your $2,500 account. Well, can you do more than that? Yes, but this is realistic. This is something people should be able to get to 10 pips a day. Let's say you have only a $1,000 account, or let's take I'm not going to do it, but I'm going to say have you take a $500 account and just cut this in half for your $500 account. So on this $1,000 account, that's your 10 pips a day. That's $400 per month. That's a 40% return on your $1,000 account. Well, that adds up pretty quickly. Pretty soon you're up to the $2,500 account in a few months. Now let's do one other thing. If you can do 10 pips a day, it's not that far of a stretch to be able to do 15 pips per day. See, it's gone from 50 to 75 pips per week. And now you take that 5 mini lots. That's about as many as you can go on the US, but you can go higher on the 200 to 1 leverage. Okay, that's 60% return on your $2,500 $100 account by just getting a few more pips. It doesn't take a lot. That'd be an average. Say one day you don't get anything, another day you get 5, another day you get 20. Say your average is the 75 pips per week. You get the concept here. You use larger lot sizes rather than larger numbers of pips. Now, will the pips come? Yes. Many of these traders we talked about earlier, making hundreds of pips per week, they started out with the goal of 5 to 10 pips per month. They moved it up until they were getting, per day, 10 pips per day up to 30 pips per day. And many of them even gone higher than that. Their goal is 50 to 70 pips per day. Now you can do the math on all that, but the point is we want to have you start someplace. So now let's focus on 10 pips per day. We want you to start out by shooting for, you may want to start out by shooting for 5 pips a day. Put on a trade. As soon as you get 5 pips, close the trade. You got your goal, go trading. Now that's easier said than done. Easier said to stop trading at 5 pips than as you get 5, then you want to get more. But at least get 5 pips a day. Maybe you have a loss, but you net 5 pips per day. Then move that up to 10 pips per day after you've done a while. So you can have 2 or 3 trades. I see traders all the time with 2 or 3, 4 trades on, and each one of them was 2 or 3, 4 pips. Well, if they closed them all at the 3 pips times the 4, that's 12 pips right there, just very quickly. And they can get out, but many times they'll make more than that because if they enter properly, they can exit properly and make those pips. Now we suggest that when you can make 10 pips a day for at least 2 weeks, then start trading live. Now this is every day for 2 weeks. That's 10 days. You need at least 10 days of making 10 pips a day. That's 5 trading days per week. Then, or if you only trade 3 days a week, well then it's going to take you about a little over 3 weeks, almost a month, before you can start trading live. That's just a suggestion. That gives you a confidence level. Now, when you start trading live, trade the smallest lot size your broker will allow. And that's usually about a dime in most cases. There may be some out there that do less than that, but most of them will at least do dimes. And so use that smallest amount while you're trading real money to start off with. Now, that's going to frustrate you because you say, well, I can make more money. Well, yes, you can. We talked about 4 mini lots. That's 40 times higher than 10 cents. So, so that's what we want to do is increase your lot size until you're making that 40% increase in your account each month. Now, how do we go about increasing the lot size? Now, there are many ways of doing it. I'm just going to propose a few. You come up with some that will work for you. But what we're concerned about is having people increase their lot size slowly so they can keep their emotions and their skill level at an equal level. If you have a lot of skill and your emotions are strong and you're only trading 10 cents, well, it's going to be frustrating to you. But if you start trading 1, 2, 3, 4 mini lots on a $1,000, $2,500 account, and you don't have the skill level, that's going to be frustrating as well. So if you can keep those two in alignment with one another, then you're going to be more calm and relaxed in trading. So one idea to increase your account by 0.01, that's 10 cents, is you can just do it once a week. At the end of every week, you say, okay, I've made my 50 pips, or if you're doing 15 pips, but let's say the 50 pips, I'm going to increase my lot size by 0.01. So if you're doing a 0.03, so you've raised it that far, now go to 0.04. Now increase it, or you can increase it by 1 lot every $100 increase in your account. That's another idea. So if you did that, then this would be increasing your lot size by 1 mini lot for every $1,000 increase in your account. And that's not even as much as what we were showing in the illustration. Usually the illustration of the 2,500 is you could do that every $500 you could increase your lot size by 1. That means every 100 you'd increase it by, instead of every $100, you would increase it by every increase it by 2 lots every $100. That's another pace. So these are just ideas, and you go by what is going to feel comfortable to you. So can you see that you can do it? Yes. I don't know all your histories, but I know a lot of you I've talked to over the years, and many of you are easily making 10 pips a day. Well, if you're doing that, then start adjusting your lot sizes so you can really start making some money. And you can do it as fast or slow as you would like, but get it up to where you're actually making money trading. If you're consistently making pips, increase the lot size. That way you can make money by not changing the way you're trading. If you feel comfortable making a certain number of pips, increase the lot size. That's the way you can increase making more money. Now, get a good trading system. Obviously, we feel like we have one that's very good. If you have it, use it the way we've suggested. If you're not successful, you're doing something wrong. There are many of you and many other hundreds and hundreds of people that are being successful doing it if they follow the way it's set up and follow the rules by disciplining yourself. Learn to repeat whatever you learn to be able to do it daily, and be patient. Okay, the fastest way to get to 10 pips per day is to trade with someone that already knows how to make 30 to 50 pips per day. Does that make sense? Say you're trading alongside with someone and you can see what they're doing. You say, oh, I can do that, and they take a trade, and you say, well, I understand that. That looks like that's good to me, so I'll take it. And maybe you close it sooner and you get your 10 pips, and they make 15 pips on the trade, and they make 2 or 3 other trades you don't take. You still have your 10 pips a day, but you're seeing how they do it. That's part of developing the skills. We want to give you an invitation to come and watch 5 or 6 traders make between 60 and 100 pips per day most days. Today it wasn't quite that way. Depending on the way the market moves. Now, there were still some trades open at the time we closed the session, and so they may be making the 20, 30, 40, 50 pips for the day on the trades that were opened. To get your 3-day pass to come and see how these people are making it, this is a request for a 3-day pass to the Pip Club. Just send an email to Kirk or Jed and to this email address and ask for your pass. If you have already had a pass, and we're documenting those who get the 3-day pass, if you've already had one, you may not get another one. This is we want this to be something that you have to earn or you have to pay for. We found over the years, and the reason we're going this way is because we have given so much away, and the people that take these things don't do anything with it. The people that have paid for it, they start making money because they're serious about it. They're putting some skin in the game, and so that's why I wanted to show you, yes, you can do it. The important thing of this message is start out someplace, start out slow, and we've shown you how to build it and grow. That's what we want to get across. We want to give you a path or a way so that you can make those 10 pips per day. Now, Phil asks, what's the risk to drawdown if you're making a small number of pips? Well, you still trade the way you're doing. If you're going to have a take profit of 10 pips, you at least ought to have a stop loss of 10 pips, 1-to-1 ratio. Now, can you close that trade after 3 pips? Well, of course you can. Say it's not going against you. It goes 5 pips in your direction. Looks like it's going to change. Take the 1 or 2 pips. That's 2 pips of the 10 for the day. Have at least a 1-to-1 profit ratio for your where your stop loss and your take profit would be. That's our suggestion. The way we trade has not changed. The time frames we trade have changed a little bit. Now, in the Pip Club that you can come watch, we're trading most generally smaller time frames because that gives us more chances to enter and find trades during that trading session. When you're not in that trading session, then you can trade whatever feels comfortable to you. If you're a long-term trader, here's a couple of different approaches. I've never thought about until last 2 or 3 months of having someone that's working a full-time job trade smaller time frames. We always referred to them to trade the larger time frames, the day, 4-hour, 1-hour time frames. That's great. You can still do that. But say you're going to have an hour, you can sit down and trade. Well, if you use the 30 or 15 as your larger time frames, 15-minute, 5-minute, 1-minute, you have to be quick on the draw. You can't be hesitant in taking your trades. But that's the way we trade has not changed, but the time frames we're using have changed, and I think it's more effective in a short period of time. But then do the larger time frames as well. Pip Club just about making 10 pips a day. No, the Pip Club is making as many pips as you can. We have people reporting to us, not every day and not every trader, but we have people reporting. These are just people coming and watching, not the traders, saying that they make between 30, 35 pips up to 75 pips per day, just trading alongside the traders. The traders, what we do is every time there's a trade called out. Now, I can't take personally all the trades that are called out. There's just too many things happening many days. And so we take all the pips. If you take every trade that was called out and closed it, or when it was closed, we have people making pips of the whole as a group up as high as 200. Usually it falls someplace between 60 and 200 is where it's most often falls. He said he's only had a chance to be there once in our trading room, and he says he found out that sometimes the trades were not called out clearly, and so it's hard to document them because that's the thing that I've noticed, is that there's several traders calling trades out at the same time, and so it overlaps, and sometimes they're calling them out so fast. Those are the things we're working on, so I appreciate your input on that. The way that we like to call them out, and we're suggesting they're called out, is the currency pair, the time frame, and then the event. For example, the pound yen 15-minute blue light special. That's a signal that should be called out. Then many traders will say, I just entered the euro dollar on a fractal break or a blue light special. So when we get to that point, we're still perfecting the traders to call these things out. That's almost a skill in itself, being able to call out exactly what you're doing. You're all excited about taking a trade, and they call them out, and they may not be clear. So he says if you could understand what was going on, this would be a priceless thing. Can you trade during the middle of the day? Yes. You sit down. If you had some alerts going off that something was hit and it brought your attention back to it, you can trade those times also, going to the smaller time frames. Anything that has the pound, euro, or those pairs also that have the yen associated with them, those many times are the pairs that are moving a great deal. Now there are others that will move a lot, but on average those are the ones that would be easiest to find trades. So if you were to come and attend the session, you could see my market watch, and you'll see the pairs that I have up, and I've alphabetized them, so the first half of them will be the ones I'm looking at most often, but the others I'll trade also if one of the other traders calls it out. But the pound, euro, or yen, anything that has an association with that, generally is something that I like to trade because they'll move more. No, it's not a scalping system. Scalping is where you trade, tens of thousands of dollars, even hundreds of thousands of dollars. You wait 2 or 3 pips and you're out in 2 or 3 seconds. That's scalping. We're in trades from a few minutes to a few hours, and so we're trading short term many times. Occasionally the trades are held overnight, but most of the time it's short term trade, not scalping. It's best to confirm on 3 time frames, even though we're using the smaller time frames. The first thing you do, I don't necessarily look at the smallest time frame unless I've already confirmed on the larger time frame. Larger time frame could be the 1 hour. I just need an early bird signal on the 1 hour. Then I would go to the 30 or the 15, and you get several of those in a 1 hour period of time. You get 4 15-minute signals going off, and then that's when you can time the entry on the 15, 5 and 1, or the 30, 15 and 5. So yes, we still use the 3 time frames. The volatility doesn't really affect the strategy. The reason we want to have pairs that are more volatile is because they have more movement. It's easier to make your 10 pips a day on a pair that's moving. We usually trade those that are moving at least over 100 pips in a day. So that would be easier to find to get your 10 pips.